Good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, October the 2nd, 2025, recording this in the morning. Okay, let's have a look at and see what's going on. Obviously, one of the main things is that we do have the government shutdown. So, in terms of data in the US, we will probably not be having this morning. In fact, I don't think at all we'll be having the initial jobless claims, which you see here. The initial jobless claims may be delayed by US shutdown here on the Bloomberg. So no initial jobless claims, no continuing claims, and other data this morning. So that means that we're primarily having to, when I say we, the market participants, but also the Fed, having to sort of fly blind without any particular data. And that's interesting because that's going to let the market just find sort of technical levels and maybe more fundamental levels. So that's interesting in itself. What we did get yesterday, though, we did get some fairly sobering employment data from ADP, so the private payrolls. And as you can see here, it came in, expected was about 50,000, came in at minus 32. And even fairly troubling is that the prior number, the previous number at 54,000, was actually revised all the way down to essentially flat minus 3,000. So if you put the previous month together with this last month, this is painting a gloomy picture of the employment situation. Definitely seems to be slowing down somewhat. It's obviously sort of noisy data and not perfect, but it definitely seems to be sort of on a slowing trend. On the other hand, though, if we look at the ISM manufacturing, which came about an hour later yesterday, you can see that overall this is for manufacturing, and the idea that globally as well is that often, if you look at the purchasing manager indexes, the PMIs, you see that there's more strength in the service sectors overall than the manufacturing sectors. So, in general, the manufacturing is a little bit weak. This is in the US. So you see here, manufacturing came in at 49.1. That's to be expected, but it's still not a strong number. It's not a disaster by any stretch of the imagination, but it's not a strong number because anything below 50, of course, is contraction territory. What the market did like this, prices paid down a little bit, eased just a little bit, not hugely. They're still too elevated for the Fed's comfort, but still not making new highs. And 61.9 is lower than last month, so that's a good thing. New orders a little bit softer here. And if we look at employment, technically a little bit better than last month, but again, well below 50. So overall, if someone said to me, how would I interpret the ISM manufacturing, I would say not disastrous, sort of a little on the soft side, a little on the soft side. Having said that, you have a situation here. It's interesting how the market reacted, because if we look at the market reactions, just the market took that very dovishly. And you can see here with the SOFR curve, just going back, before yesterday compared to today. So you can see that, a couple of days back before this data, which is the orange line, and you see the live data, which is the white line here. You can see that the whole curve, the SOFR curve, has repriced slightly dovishly. Basically, looking at those ADP numbers, which previously hasn't garnered too much attention, but with the absence of official government sort of data, obviously some of these private surveys are getting a little bit more attention. Nonetheless, what we do see here is that we did get a sort of a 4, 5, 6 basis point repricing towards the dovishness all across the curve. And just interesting to keep in mind and to note that the terminal rate here seems to be the end of 2026, so about 14, 15 months away from now, and on the SOFR contract around about 3% or so. So keep in mind that the Fed funds rate at the moment, the effective Fed funds rate is 4.009, so let's call it 4.1. So that's about 110 basis points of pricing of easing still being priced in. And as we can see here, if we just bring this up, you can see here that for the December, we're now at 46 basis points, which is almost 2 cuts. If you remember yesterday's video, that was down about 41 or 42. So we're creeping back up towards 2 full cuts by the end of this year. And October is 98% price now. So definitely some dovish repricing. And you see that here on the December pricing. You see this is where the data came out for the ADP numbers. And you see prior to the data, we're at about 43 basis points of cuts, and we got down to about 48. So a good sort of 5 basis points cuts initially after the data, and it's given back a basis point or so. So what does that mean? That means that the market still is thinking that the the employment situation is weakening a little bit, and that the Fed will probably be cutting in October and most probably in December as well. And we can see just a few and what that means for the equity market. We see that the equities continued to grind up higher yesterday. See they're pushing higher and higher. And some people, of course, people are saying things are overvalued and AI is in a bubble and whatnot. But the reality is we do have a Fed which definitely seems to be cutting in the absence of other official data telling us that the economy is running super hot. We're not going to get the non-farm payrolls tomorrow, no initial claims today, and maybe not other CPI numbers and whatnot coming up. If this shutdown lasts for another week or two, and that means that the equity market, this was the relentless bid is just sort of grinding high. You see here we're having new high here in the S&P 500 futures, Nasdaq as well. You can see the chart, not too much commentary required. Russell is underperforming, but still, let's be honest, this is not a disastrous chart. I mean, this is still up towards high. Now, if we look at the equal weights, you can see the equal weights also doing pretty well at this point. And if you look at the Mag 7s, all doing pretty well. So, the perma bears are continuing to say, it's a market to short, that the economy is collapsing. Now, is the economy slowing? Maybe the employment situation is softening a little bit, but overall, consumption still seems to be quite strong. So equities, all that to say that equities are doing quite well. We've got a little sort of chart here, which is the number of S&P 500 stocks above the 50-day average. As you can see here, that's not at sort of highs. It's not in the 68, 70, 80 percentage kind of thing, but it is moving up. And I was doing some research yesterday. This number is not necessarily predictive of anything. It's this can be low and the S&P can be doing well. So, but it's interesting to keep an eye on that. Now, if we look at European stocks. No need to comment about that. You see the Euro stocks ripping higher here, out into new highs here. So globally, equities are doing pretty well, and it seems that the market is saying, hey, the global economy is okay, the U.S. economy is okay. There could be some weakening, but on the other hand, that's going to be attenuated by Fed cuts and stimulation. So for the moment, the economy doesn't seem to be weakening enough, and the labor market doesn't seem to be weakening enough to prevent the market from adopting a bit of a glass half full kind of sort of thought. So if you look at Germany, also doing pretty well. The DAX here up. So European stocks also doing quite well. If we look at some other things, so just want to look at some of the currencies. So with this government shutdown, I mean, just again looking at some of the bonds, look at the 2-year here. You see a big rip yesterday, just on the 2-year. Just on the fact that the data seems to be weakening a little bit. That caused the curve overall to sort of the bull steepen. I can just find the here we go. The 230s. You can see a bit of a steepening yesterday, so the curve starting to steeper. So what is interesting is that on the government shutdown at a certain point, is that going to cause some risk off? Possibly. So could we get a little bit of weakness in the US dollar as those yields go down as well? So let's just have a look at the dollar overall, the dollar index here. And we see that the dollar, it is trading down. Now, is that a function of the lower yields? Probably. Is that a function of a little bit of nervousness around the government shutdown and maybe a small hit to economic activity? Yeah, for sure. That is a bit of a push downwards. So therefore, the currencies to maybe gain on that, you see something like the Japanese yen. The US dollars come off a lot against the Japanese yen here. We have this sort of Fibonacci sort of level down here. So, but it's on the shorter term fib, it's broken down through that. So that's looking quite weak there for the US dollar versus the JPY. If we look at the euro, not grinding up as much. It seems here, but doing reasonably well. So the point is here is we also had yesterday the Lisa Cook situation. So Lisa Cook on the Federal Board of Governors was fired in theory by Trump. But yesterday we had the Supreme Court of the United States essentially saying that they would hear arguments in January of 2026, and that for the moment Lisa Cook could stay in her job at the Fed. So what that means is a couple of things. So sort of in a broader sense, that means the Supreme Court seems to be giving a little bit more sort of institutional support to the Fed compared to certain other sort of government agencies. And it means that no decision on Lisa Cook will be made probably until the spring because they're going to hear oral arguments in January. So the reality is they probably will not reach a decision until February or March. And that's a setback for Trump's attempt to influence the composition of the Fed board. It also means that the potentially one could argue that's one less sort of ultra dove on the board. And therefore, the point I'm trying to make here is that for the US dollar at the margin, that could be a little supportive because in theory, it's a little less dovish because we know that, if the Lisa Cook firing were to be confirmed and were to proceed, we can only expect and assume that Trump would put a super dove like Stephen Miran on the Fed board. So at the margin, that decision yesterday by the Supreme Court to sort of extend her or to allow her to stay on the board, that is a little less dovish in terms of just the composition of the Fed. Now, is the dollar going to gain from that? Yesterday there was a little pop for just a few minutes, nothing massively significant. If we look at the euro, it's interesting just looking at the euro here because I mean the European central bank seems to be in a fairly happy space with where they're at. Yesterday we got inflation there. We had the CPI number at 2.2%, which is obviously lower than the US and is down towards their target. The core, which has been that way for about 4 or 5 months, remained at 2.3%. So it's still a little bit higher than where they want it to be at 2.3%. But basically, it seems that the eurozone inflation is relatively contained, but not. And the economy is relatively acceptable. We had employment numbers this morning from the eurozone about 6.3%, I think it was. So it went up about a tenth, but it's still historically pretty good. So the Europeans seem to be comfortable where rates are at. And for example, this morning we had Kazakhs on the ECB Governing Council, and this quote here sort of sums it up. ECB rates can stay where they are if no further shocks. So the point is that if we just go and have a look at what's priced in here for the ECB, which I'll bring up here, you can see here that essentially the number of cuts, we don't even have a third of the cut or 33% chance of a cut for the next year. So the market is really at this point saying, as you can see here, there's just no cuts, like, maybe sort of 7, 8, 9 basis points priced in over the next year. So the market basically is agreeing with the ECB and saying, hey, you guys are not doing anything, hiking or cutting, but not cutting for the next year. I personally think that the risks to the downside could be a little bit more, maybe geopolitical risk, maybe the economy weakening a little bit. We'll see what happens. But that to me does seem to be a little bit underpriced in terms of risk management. We shall see. But just interesting to note here that both the Governing Council and the market seem to be assuming that there will be no shocks to the European economy and that things will stay as they are. Just finally, guys, just want to look at a couple of markets. We see the precious metals continuing to absolutely rip higher. You see gold. Where are we? So gold had a little bit of a pause. Maybe it was, the Golden Week holiday beginning in China. But the reality is that seemed to have lasted, 24 hours. And gold, as we speak, seems to be heading higher. Similar kind of situation here with silver. You see silver will put on the futures. Again, very, very strong. There is some overhead resistance in silver coming up, at about $50. If we go back sort of historical levels, we are getting some kind of excuse me, overhead resistance coming up. But at this point, we have a weakening dollar, questions about the independence of the Fed. You have a debasement of currencies. And the important thing to note here is that it's not even the US dollar. It's the gold is going up against all fiat currencies. It's going up against the euro. So I think I've got against the euro here. So I mean, that's the chart against the euro. So a huge breakout as well against the euro. It's also a huge breakout against the dollar. So the issue here is not necessarily, the US dollar is being debased and because of Trump and the Fed. That is part of the story. But the global story is that the gold market is signaling geopolitical risks. There's obviously central banks, the things like the People's Bank of China, who want to become custodians of bullion, obviously buying a huge amount of physical gold. But there's a general sense that inflation is sticky and that governments generally are way too comfortable, much too comfortable with a lack of fiscal discipline and that fiat money, only backed by the government's goodwill and on paper, is not the place to be keeping your assets and your store of wealth. And that's why gold is going up everywhere against all currencies, especially those who are considered the more debased. What is interesting is just the silver gold ratio. Just having a look at that. As you can see, it was in this sort of trading box here for quite a long time, between about 88 and $92. And as you can see here, as gold outperformed, but now really you can see gold has been underperforming silver a lot. But we are starting to get down to maybe some resistance levels here. And that could be just an interesting level to keep an eye on, that sort of 80 or 79, just down around here, because that could, maybe coincide with silver hitting about $50, and it could signal at least maybe a short-term pause. Finally, just want to have a quick look at liquid gold oil, which is here. And we can see very important levels here. This is like a quintuple bottom here. And you can see that this is just on sort of headlines that maybe the OPEC Plus wants to raise their output. And I think I mentioned yesterday the Iraqis are talking about raising their output. On the other hand, you have some sort of talk going around that the G7 is thinking of putting more sanctions on Russian oil exports. That hasn't really been effective in the past, and that could be a little supportive at the margin for oil. But the oil market here looking heavy, trading there, and the chances of breaking there reasonable. I'm not saying it's going to break all the way back down into the low 50s, 54, 55 here, but this is a pretty heavy market. We can also see, because we had a build yesterday, a significant build. We also can see in gasoline just how heavy that market is trading as well. And if you just look here on the gasoline chart on the dailies here, you can see that gasoline triple or quadruple bottom definitely is in danger of falling. Although that's going to be, if it goes through there, that's quite a big level. So it may indeed find some support there. Okay, I'll leave it there for today. Let's see if the US government gets its acts together, Otherwise, there's no data released for the next few days. Thank you. Have a great day.